Oh, welcome, welcome. Hello, one, hello, all. It is Friday. This is your 1 hour of the markets that you need to master your portfolio and make that money. We're joined by a special sexy guest today. I'd like to introduce my good friend here, Mr. Wolf Financial, the darling of FinTwit, as some would say. How are you doing today?
Living the dream. Great Friday out here. Market's ripping. Bitcoin's ripping.
It,
Everything's looking good.
it is. So let's talk about it. So you guys saw this today. We had our Jackson Hole. We'll get into that in a minute really quick. I want to dive right into your SPY options targets for the week. We're going to pull the chart up here. We're going to go through our bullish and our bearish scenarios so that you guys are set up for the week. For those of you that are trading options and do not get beat in a very volatile market and very profitable market, might I add. So we got our SPY chart here. We're on the 1 hour view. Just give you a quick look at how we've traded today. We saw a lot of volatility pushing up to about 563 at the open. We came down to 557 about midday. You know the hype from Jackson Hole was going to influence the market, and I think the uncertainty of what we can expect with jobless and rate cuts was going to definitely have an impact, and it did. So for those who have been following this stream, we do this every week. On Mondays, we broke down your targets for you Monday. 559 to 563 was the range. If you guys recall, the trade was as follows. Confirmation above 559.5. We go to 563 calls. Those should be printing for you right now. Congratulations if you took them. Below there, we had below 559.5. We are going to trend support at 555 puts. Those would have paid yesterday. So you should have had at least 1, 2, 3 trades. I mean, 4, even if you count this one, but at least 3 solid 30 to 50% returns on those same 2 options contracts that we broke down for you. So congratulations, those of you that took them. If you did, please hit that chat and let us know that you're making money by following the stream. That's all we care about at the end of the day. So going back into the chart here again, our range is as follows: 59.5 to 563.75. We want to see this range play out before we make any decisions here. Back in January, we gave you that price target, 563 on the SPY by end of summer. It has been clapped. It happened yesterday, 563.37. I think, nope. So I guess it happened in July, but nevertheless, it's back. So we've hit that target, which is a great sign. That swing trade paid off multiple hundreds of percent. Congratulations if you took it. Tomorrow into the open, here's what we can expect. If we see a stronger readout through the end of the day, I think this momentum is going to continue and your range is going to be in effect, which means that we should approach 563. We are currently in purgatory. This is no man's land. This is where we do not engage in options trades because the risk is not worth the reward. So as we are staying away, we need to make sure we have our levels marked. I will be publishing this chart to TradingView. You could find our TradingView on this PennyBois. There you go. So if you don't want to mark these levels yourselves, go there and get the actual chart. I would suggest just throwing these horizontal lines on so you're prepared. But it's either going to go one of 2 ways. I do not think we're going to chop anymore after today. I think today was the decision-making day. We are either going to head back down and we're going to go to 555, or we're going to come back up and go to 563. Looks like we got some big dogs in here. Let's pop that back up. Mr. Evan, stock market. I believe he's the most, I think he might be the biggest influencer I know. And if you guys don't know, he is one of the most handsome influencers I've ever met. So I'm just going to throw that out there for what it's worth. I don't think he's been doxxed, so I'll leave something for the mind to wonder about. So you've got our range, you've got our targets. We do not want to see anything in the midline here. That is where we stay away and wait. So below 559, we're going puts. Above 563, we're going calls. But the question is, but where? But what would be our upside price target? Well, I think SPY is going to stay true to its ability to trade within $5 to $7 ranges pretty consistently, and I think we're going to stick to that. So we're just going to extrapolate up and go 568 because it has followed this $5 mark pretty much all the way up. Now that volatility will expand as price goes higher because it's based on percentage, not dollar value, but we can use those dollar values for now. So I think trade number 1, just to keep it very simple for you, is our bullish trade once we break up and get confirmation on the 15-minute or ideally the 30-minute. When we get confirmation above 563.75, I'm going to go 3 weeks out as per usual, aiming at the 568 strike. We're not going to go through the options chain and switch the screen a million times just because that'll take too long. So let me just go find 3 weeks out puts us at September 13th. And we are looking at the, what is it, 568. The reason I like this is because this could be a great swing. Should we get the right momentum, I think this could position itself as a wonderful swing trade if we do get some upside volatility in the next couple weeks. So we're looking at the 568 call expiring September 13. We would take that on the breakout and confirmation on the 30-minute chart above 563.75. That trade should then continue and trade up to 568, thus giving you a substantial profit to take home. Now, the bearish situation, to go through quickly, is going to be very similar. We're trading these same ranges. We've talked about this many a times. We are just going to stay true to the ranges that we're following here. And if we do not hold or we get rejected at 563, that's the first setup I'm looking for, is a test and rejection, again, on the 30-minute chart, which means we might push up, but then we come down and close that candle. I would be taking the entry of these puts, again, 559 puts, September 13th. I would be taking those puts right on that confirmed entry and trade that down to 559. The downside trade I like even more because we have long-term trend support catching us at about 557. So I think these could actually escalate into the money and go a little bit further than our expected target, which is always good, leaving a little profit on the table. But now you guys are mapped out. You have your bullish and your bearish trade all planned out for you. Simply need to follow the levels, and the trade will play itself out with very, very limited risk to the reward. Again, you guys know I follow the 1 to 3. I risk $1. I expect to make 3, and this formula follows that, and you should be walking away very rich, fat, handsome, and happy after that. So, yeah, that's pretty much my take on the SPY. Let me kick it back out to the weekly chart. Jackson Hole today. What are you boys reading from that?
Yeah, so Jackson Hole, Powell essentially confirmed what everyone anticipated. Rate cuts are coming in September. I really don't think we're going to get a 50 basis cut, but we're for sure going to get 25 basis. Based on the language that he said today, he essentially guaranteed that's going to happen. So clearly the market loved that because right when the way it worked this morning, before Powell even spoke at Jackson Hole, his speech got printed on the Fed website. So you knew what he's going to say before he actually said it. As soon as 10 a.m. Eastern happened, like the speech got released, market spiked. And it kind of has held that. It's been a little rug pulley where it hasn't really been able to hold these big moves. It's slid down. Like it's a very tough market to trade. However, the way I like to call the market we're in right now is it's a mildly bullish market. What do I mean by that? I don't think we're going to be able to hold these massive gap ups anymore. Like the characteristic of the market really isn't there on the volume front, and the dips aren't getting bought up as much as it has prior months. Like the characteristic of any kind of dip, there's been instant buy up. That's not the case really anymore. You saw it yesterday and you saw it today as well. Like we were still at a lower high. Correct me if I'm wrong. That's kind of been the trait for the market the past couple weeks. Lower highs, higher lows. Like it's a weird time to be trading in the market, mainly because you have to ask yourself what's being factored in, what's being priced in the market right now. Clearly, the market's pricing in 25 basis cuts, in my opinion. I think anything higher than that, I'm on the camp that it's more bearish. Like oof, Fed sees something broken, and that's a no bueno situation, in my opinion, long term. I would best case scenario 25 basis cut in September, do another 25 basis cut after the election, and we get 50 basis cuts for this year, and then we can see in Q1 of next year. That's the best soft landing narrative, in my opinion. Anything higher than that, I'd be like, oof, something's wrong, and it's not going to pass my sniff test. And I think that's kind of how the markets are reacting to Jackson Hole today. So I love that catalyst is finally out the way. The next one is Wednesday. Wednesday will be the indicator of what's going to happen in the market for the next couple of weeks. Is it going to go test new all-time highs and the next leg in the rally occurs from NVIDIA's earnings on Wednesday? Or is NVIDIA going to have any kind of glimpse of any softening in demand for AI? If that's the case, all of tech and essentially all the indices then, because tech's such a big component of SPY now, will go down. And that's going to correspond with a really tough period in the market of September and October. Like I forgot who said it on the spaces, but I looked it up and it was accurate. The best September we've had in the past 4 years was a -4%. Let that sink in. Like that's a -4% was the best September we've had in the past 4 years. it's a really tough time in the market in September. I've called it on Austin. I was like stream past couple weeks, like something weird always occurs every single year, and nobody can explain why it is. This answer, it's a September thing. That just shows the level of like, woof. That's why like we're about to talk about strategy. I think that's the best utilized in this kind of mildly bullish market that we're in. That's in a manageable trend, but there's still heightened volatility. It's in it that makes it really hard to trade. And essentially, you're focused on one specific lane to optimize that kind of environment, and that's the wheel strategy. Which I think I'm gonna let Goff speak a little about that, and I can give my 2 cents on it as well.
Yeah, absolutely. And I can cover that. And I do have a couple thoughts as well on the market. One of the interesting things being that with the market, we've shifted around a little bit. We are pretty close towards all-time highs, but the fear and greed index has us at exact neutral, has us at a 52 today, which is pretty interesting. I actually don't often see neutral in the market. It's very rare. You almost always see some towards lean towards greed or some toward a lean towards fear. But today, neutral, which I do think makes sense. Real quick, before we dive into the wheel stuff, super excited to be working together with Peerless to put this wheel strategy, really the first time it's ever being done as an ETF, in front of a much larger audience. Quick disclosure on it. The advertisement for wheel is a paid advertisement. It's intended for informational purposes only. It's not a recommendation of any specific stock, ETF, or investment strategy. Investing in stocks and ETFs, of course, involves risk, including the possibility of losing your entire investment. Always conduct thorough due diligence, and of course, consult a financial advisor if you feel the need to. With that being said, wheel is something that has fascinated me lately and has held up really nicely in this market, even with that dip that we had recently. This is WEEL. For those that aren't familiar, the wheel strategy is rotating, and Austin, you're the one that runs it really, really often with that ability to combine cash secured put writing with covered call writing. So you're taking the two and putting them together. There's a lot of ETFs and funds that have come out recently that do one or the other, but this is really the first that I've seen and potentially the only one on the market that is actually running the strategy itself. And what's really valuable about this is a lot of retail does attempt to run the wheel strategy, but they run into problems typically due to a lack of capital, where you end up running this on very small and volatile names simply because you don't have the capital to purchase 100 shares if necessary, or underwrite 100 shares, right? Things along those lines. They're now doing this with about $6 million in capital already in the AUM there, which allows them to run the wheel strategy on large technology names, right? Large financial names, things along those lines. You could look through, it's a very diversified portfolio that they are running this on. And they've only been around at this point since May of this year. But you can see, even with that dip, they're all the way back. I think right now, the wheel itself, the ETF, is trading at all-time highs, but that's not really what you're looking for in a company like this. What you're ultimately looking for is the distributions that you're going to get. And because they started it late in the last quarter, they didn't make that first quarter distribution. The SEC allows you to do it just as long as you're making the year-wide distribution. So that first one I'm pretty excited for should probably come towards the end of this quarter, I would believe, near the end of September. And the product has really taken, from what I've seen, Twitter by a storm. Everyone that's looked at it, including a lot of friends of mine who are experts that have run the wheel strategy, are pretty fascinated by it. And I do think for me, I'm someone that in the past has attempted to run the wheel strategy, but there's certainly some finesse to it. There's some suave, right? You have to be able to pick the right names. You have to then run it, pick the right strikes. To be honest, a lot of retail is not capable enough of even trading options, let alone to run the wheel strategy themselves, but they want to be able to make gains off something like this. So that's where I think a tool like this comes into play. It's tradable or buyable on all platforms, Robinhood, Webull, whatever you're looking at, you can get it across the board. And it's relatively early in the journey. So I'm really excited to see them just continue to innovate. As someone who runs the wheel strategy, Austin, I'd love to hear your thoughts on this.
Yeah. So first thing I'd say, Chad, if you want to hit that chat, who's running that wheel strategy? I see a couple of you in here that are in our lifetime group that are running it with Bull every week. The wheel is awesome because what it allows you to do is make that passive bread. I mean, this is the beauty of it, in my opinion. It's like you get that passive income selling options while also getting access to buy good names that you like at a discount. I mean, that's kind of the whole theory here, right? Is that I'm selling premium against the idea that this company is going to go down. So the cool thing is like, if it's a name I really actually want to buy, I get the opportunity to buy it should the puts get exercised. If they don't, then that means I basically was given free money. So there it is right there. So I was waiting for JetBlue. They have run the wheel on this. Like, I don't even know how this is at this point still viable. But like my guy Tony here, I think just this year he's made like 5 or 6 just JetBlue, 5 or 6 G's, just JetBlue running that wheel. So when you find stocks that are in predictable ranges, it makes it very easy. Like we just broke down for you guys on the SPY, makes it very easy to trade those ranges because all you're doing is you're playing averages against themselves. Like you're betting against you're betting with the mean, the norm. You're betting against the outside volatility fluctuations. So on good names that you want to own, especially those that pay dividends, this is a phenomenal strategy to run because it allows you to, again, just curate this list of great names, get them at a discount and hold them, which if you wanted to anyway, you're basically just getting a risk-averse opportunity to buy them at a discount. Because again, stock goes up, you got paid for doing nothing. Stock comes down, you get exercised, you bought a good name that you like at a discount. Then you could, again, turn around and sell covered calls against. I mean, there's infinite ways to make money doing this. But I think you touched on something that I think is very important to mention. And this is what shocked me when we first talked with their team. There's Tony right there. There's my guy right there. That's the wheel guy. His whole trading has been based on that. It's beautiful. I love it. Shout out to Tony for crushing it. So one thing he brought up, well, specifically that I like about this that I didn't even understand until we talked to them and they were breaking down the strategy and like going way in too far past my competency explaining it. But one thing I've always had an issue with is with the wheel to make it affordable. If you don't have, a 200-300K account, you're going to have to choose small and mid cap names. And that's tough because the option spread on small and mid caps is always greater. Sometimes the spread on the strikes is even $5 on a stock that's $5. So that's extremely tough. So it doesn't give you the same, I guess, confidence that, like, say if I wanted to sell calls against Apple, right? I could sell, $1 short or $1 long. It's easy. But with the smaller names, you have to go take a little more risk and thus more volatility, and thus it's not what you want. So they have the capital allotment to run the wheel on the right names. Like I'm talking true blue, long-term blue chip stuff that we wouldn't, none of us independently, or probably most people here would have that ability to do so. So I think the advantage here is that they could run the wheel on the most predictable names, period. And capture those returns with ease in most ways, in a way that we could never do. Does that make sense? Like, I don't know, that blew my mind when we first started talking to them, and it was like, damn. With small caps, you can run it like they've done it with JetBlue over and over again, but there's always that risk. There's always that risk. I am snug as a bug in a rug between my handsome boys here. Look at that. But yeah, you guys know what I'm saying there? There you go. Starting the wheel on Jumia.
I was about to bring that example. Like you brought up small, like Jumia, the volatility associated with the Jumia contract is probably triple digits in IB, 100%. And they just experienced a 70% drawdown. But if you want shares, capitalize on the premium volatility, and you're more than okay and more than happy on like accumulating those shares if it hits. Jumia is a perfect example. Rock Lab's another example. Rock Lab's premium is probably double what it was a month ago. You can take advantage of that premium via wheel strategy, and it's a small cap stock that is highly explosive. But like I think it's participating in a SPAC-like behavior due to ASTS. I'm not saying Rock Lab is a bad company. I'm just like, I think they're benefiting as a simply play for all the SPACs that are kind of running the past couple of weeks, and the premium's elevated. That's eventually going to return to the mean. But if you don't really feel comfortable with the small cap route, which I'm totally understand because you have to have a specific characteristic as an investor to be willing to invest in small caps, and you don't have the capital necessary for a real strategy. That's why this ETF is incredible, especially when the market's up 16%. The VIX is at a 16 handle. We've mentioned all the time, the VIX is always, and a normal time is between $12 and $15. When it hits a 20 handle, that's like, oof, it's expensive. Every contract's expensive. Right now it's at 16. But more than likely, I think we're going to approach the 20 handle as we enter September, when I just called out the fact the best September we've had in 4 years is minus 4%. There's going to be volatility in the markets. So, in a best way of raising cash in the meantime, while we get through the storm of volatility, is a wheel strategy like this, where you can get paid as you monitor the storm while taking advantage of all the premium that the market's elevating the volatility in all its contracts. Like, it's a win-win scenario, in my opinion. And that's kind of how like this ETF, like this partnership, this streaming is happening at a perfect time as we enter the most volatile time of the year, which is September and October. And corresponding with the election is in 3 or 4 months now. So like it's going to be a crazy time in the market that I wouldn't blame you that you wouldn't feel comfortable buying stocks or using your cash towards bullish positions when the market's up 16% and we're about to enter the storm of 3 months of volatility.
Yeah. No, I couldn't agree more. And I think with the VIX, that being said, like I think you brought up a really good point on some of those small cap names. That is where you really can capitalize. I mean, you see some of those contracts going up to implied volatility of like 150 plus. What that means is that the second that volatility cools down, guys, the value of those contracts, regardless of where it moves, is going to deflate. So, for example, we brought up that example of Rocket Lab. Let me pull that chart up. I think this is a good one to use this example with. We've been booming, right? So we talked about this one, $3.90, $3. We were buying right here, $3.70. Shy maybe even sooner, I don't know. But we were talking about on the stream, you're up already almost 100%, right? So you have an extremely valuable equity position that is up almost 100% in, say, a name that we talked about being a long-term pick and a little bit of a moonshot at that. Damn, we should have brought, this is the wheel guy. This is who teaches our wheel stuff. He's Mr. Wheel. We might have to bring him in, talk wheel. So look, we have a recent high on Rocket Lab at $8, and that's going to be a significant supply zone where they're going to try to unload and keep that price bottomed out. So basically anybody that went short on this name does not want it crossing that line. They're pretty much screwed at this point, but nevertheless, that's going to be a significant point of resistance. So what we could do is as this runs up to $8, we, for example, could sell the $9 calls as a short hedge against a position, or we could start selling, say, I don't know, $5 puts, $6 puts. So that way, look, if your position stays green and up $6, $7, you're golden, you collect the premium, you go home, especially if the implied volatility is over 150%. Here's the cool part. The stock could come down significantly. And if the implied volatility drops, even though it's moving in the direction of the trade, those contracts will become a lot cheaper, right? And since you sold them, you want to either buy them back at a cheaper valuation or exercise them and take your position. So, yeah, I think that implied volatility tracking stuff is really important for people to know that are leveraging this strategy because it's a core component of it. I mean, I can't believe this came down to like 18, $19 on those sell-off days.
So I also mentioned a lot on our stream, like to be an investor in this day and age, you can't just be a 1A type of investor. You need multiple tools in your toolkit to maneuver this kind of market that we're in. I'm a long-term investor, but I still wear a short-term trading hat sometimes. I'm a ultra perma bull, but I buy shorts sometimes. And if I know that the market's probably not going to go anywhere, it's a mildish bullish trend. Like we never break the 21 week EMA on SPY. Like it's rare that we do. That tells me that the trend is intact, but I'm mildly bullish because we're pulling back and we're having lower highs. Like what kind of hat am I going to wear? The wheel strategy is the third option. So that's like why, like if you guys aren't a wheel strategy type of person, don't be so hard headed because you'll lose out on some pretty simple income in the meantime. And then you can use that income to whatever your lane is in the long run. But the next 2 months, like I wouldn't go bullish in the market. I just really wouldn't. Historically, it's just not the time to do it, but it doesn't mean you have to stay on your hands. Like there's other ways you can make income. And this is where the versatility of being an investor with all these different tools comes to play. And like, if you guys are first hearing about the wheel strategy right now, perfect time because it's a Friday stream. You have 2 days to learn up on it and see how you guys feel next week when the week starts. And September is it's a week away. So like you have essentially a full week to learn the strategy. And then once you start getting that income, you'll become a little addicted to it. I'm not going to lie because it's a lot easier than it seems. So that's my 2 cents on that.
Yeah, I couldn't agree more. I think it's like it is one of those tools you got to have in the toolkit at any given moment. And again, what I like is, like, I'll be very honest with you. So like I was looking at this here. One of my main things when we started talking with the guys at Peerless, because I want to understand this, like, what does it differ in any way? Like, how are you leveraging it to the best of your ability? Blah blah. It really hit me as we're talking through it. I was like, dude, I love the wheel, but I realize I don't get to run the wheel as much as I'd like because I don't have the time. So I will say, I think that they broke the mold, and I think it's really intelligent to release an ETF like this because nobody else is doing it. And it is a great passive income strategy. So it does make it easy for someone like myself who's just like, I'll be honest, I'm not going to have the time. As much as I want to believe I know I can do it. As much as I want to believe I'm going to go in and do it, I'm just not. So for me, someone like me, this is like, I think, something kind of perfect. I don't know if anybody else can relate to that, but
I mean, it's a tedious tool. Like, it's hard, like figuring out the expiration, selling the calls, selling the puts, like monitoring it. Like, it takes time. And if you're like any kind of slippage on responsibility of monitoring it, you will pay the price. That's why this simplification of this ETF is like perfect, especially in a time where everyone's simplifying every single investing toolkit. The wheel strategy was kind of the last one that wasn't really simplified yet. And that's why this ETF does come at a great time where, like, I don't have the bandwidth or time to like watch out for my wheel strategy at all. But if I just go the ETF route, I can sleep nice and like well, knowing it's being properly managed. I'll benefit from my initial thesis on why I want to participate on this strategy.
Yeah. Couple quick thoughts. And somebody asked if there was a link where they could check this out. It's just peerlessetfs.com. We read out kind of a disclaimer earlier, so I think you can go and check it out right there. And they've got a nice, fun animation when you come into the sites. It's kind of worth going to the website just to check out this cool animation they have right off the bat. But then they have full investment case, prospectus, fact sheet, all those details are in there. And they do say that they are the first ever ETF that offers turnkey access to the wheel strategy. So
they are. They really are, I think.
Yeah, I've not seen anything else that is similar to this, even, to be quite honest. Like we said, we've seen other income-focused ones, and I almost like this idea of taking like 10 to 20% of my portfolio in times where the market is at all-time highs and putting it into these income-focused areas. And what's nice, just an example right here, because we've spoken before about another income product on our streams, THTA. And THTA does provide, maybe a little bit of a higher income, but when you look at the base, it's actually interesting when you compare these two. During that August 5th move that was so volatile, THTA took a 11.8% down draw during that, and then they bounced back, and they're down about maybe still about 7%. So they bounced back about half of it. When you look at WEEL during that same time period, they took about a 4% down draw from highs, maybe 4.5%, and they're actually now higher than they were going into that. They're actually higher than there. They've bounced all the way back, which is really interesting to me, just looking at this in like other income products for different people. So I think that there's a place potentially for both of those in a portfolio. And obviously with THJ, they ran into that because VIX premium spiked so heavily, and they are so predicated upon that. But Wheel is not, right? And so maybe Wheel takes out some of these certain elements for other people that want to have it in their portfolio.
Yeah. No, man. I mean, I think they nailed it. And their obsession with it is what kind of sold me on it. Like, okay, these guys are obsessed with this. This is perfect. It's someone who's going to just be super anal and tinker with it until it's perfect. That's exactly what I want. And someone that's managing something that affects my money, I want to know that you are obsessed with it and that you will make it as good as it could ever be. So I don't know. I can't ask for more on that. SPY, very interesting here. Just quick update. Now, this is the 5 minutes, so don't make any decisions based on that. But we are getting pretty decent influx of volume here. That is, I would say, outside the norm for this 5 minute block of time. That is coming in on the sell side. So, for those of you that are trading this one, make sure you got your wits about you. Anytime you're trading these large scale economic announcements, you always want to make sure you're hedged. For those of you in the Discord, I posted the couple hedges that I was going with into the weekend that expire Monday that will hopefully expire worthless. Because again, they were very, very small, I guess, in the form of a lotto. That gave me that put downside protection. You don't typically want to go debit on hedge protection, but in this case, with the time I had, that was the best we had to offer. So basically, yeah, you got about 5-7 more minutes for those to open up if you don't have that downside protection for Monday in case something does happen over the weekend.
We got a good question if you want to talk about this real quick.
Well, hold on. So this is the one thing I don't understand is their payments are quarterly, correct?
So ultimately, they can actually structure them a little bit the way that they want. And right now, I believe that they are doing quarterly. They can move that to monthly. To be quite honest, the SEC guidelines just says you have to do the yearly payout each year. I think that people structure it quarterly, they structure it monthly because people like to see money coming in quicker. But I think you could still legally just pay out one time a year, to be quite honest, at the end of the year or something like that. My understanding right now is that they are going to do quarterly. The last one, it started mid-quarter, so they didn't want to make that payout, and they're just going to add that payout to the one at the end of this quarter.
Okay.
And for all these questions, which by the way, we've done a good amount studying this, but there's depth to this. We are bringing their team back onto Spaces next week on Thursday at 2 p.m. Eastern, and we're going to do a full-hour interview with them. And so if you're in this chat right now, I would recommend checking out on my page, Wolf_Financial on Twitter. We are going to do a full hour-long interview with them, and so we will be able to get all those details.
Yeah, make sure you guys do that. I'll put those in the chat for you. I'll put all the accounts because yes, that space is where you're really going to get those questions answered from the people running the strategy. So kind of can't beat that. So I put the accounts in there. Go ahead and give those boys a follow so that you can stay up to date on both trade ideas, upcoming news, spaces, and the like. But yes, to me, like where I would categorize this for myself personally is I would categorize this in the passive category of like I don't want to touch it. I want to either it to pay out into itself as a dividend would to continue to build the position and my stake in it, or pay me out as a small passive income, cover your phone bill, pay some of your car, whatever it is. It's really, guys, a lot of this is a mind game, and I think that it's not talked about enough that like you need to structure things in a way that you feel happy with the results you're getting week in, week out, month in, month out, whatever is the structure of your trading, investing, whatever. Me personally, I like seeing dividends and the like pay into the position so that the position's bigger every time I check it. It's just what I like. It's what I like to see. I don't care about having the cash now. I want to continue to build the position to where, maybe I don't check it for 6 months. I go back and look and I have 15, 20 shares I didn't expect to have because my dividends were reinvested. So, and for those of you that are taking the passive income payout, remember, building the principles is the best and quickest way to increasing the dividend more than anything else. If you build the principle, the payout is greater. So that's why, for example, we always talk about, you have a hell of a time living off trading $1,000 account versus when you hit 100K, making 2-3 grand in a month is cake because it's 2-3% of the portfolio. As the principal goes up, the risk threshold can come down and down and down to where you take much less risk to get the same reward. Same applies here. When you put that money in there, continue to build that principle. That's kind of my 2 cents on it.
Yeah. So to make you even understand even more, I'm going to share my screen a little. I think this is a great way to play earnings a lot. And I'm going to go on Earnings Hub which is my favorite place to look at the earnings. Let's share my screen.
Smart man.
Let me know if you can see it.
Yep.
Perfect. All right. This is what I'm looking for next week. Next week's earnings. Obviously, the big weight of next week's earnings is Wednesday after close right here. I don't know what I did to the gods to make CrowdStrike and NVIDIA report in the same afternoon. I'm so frustrated by that. Maybe it's a blessing. Maybe NVIDIA's earnings will overshadow whatever CrowdStrike does. But a lot of people wanted CrowdStrike after the outage. Like, yes, they knew it was like going to be a broken stock. There was a lot of fear in the name, but went down 50% in less than a month, knowing that CrowdStrike still is the best of breed cybersecurity platform that slipped up. But that slip up is short-lived and it's a bump along their long-term journey. However, they didn't feel comfortable buying that gap down because you didn't know what the bottom was. And they didn't feel comfortable buying options on it because the IV spiked on this name because it was experiencing a 50% drawdown in a matter of weeks. And this name was a consistent up to the right. It was a manageable bullish trend for years. A great strategy.
You just caught out.
Did we lose him?
Yeah, he's frozen for a second.
Can you hear me now? See me now?
Yeah.
Yeah, you're
Perfect.
back.
So great strategy is like do a wheel strategy and CrowdStrike. Take advantage of the volatility associated in the name. If it goes lower, you'll add. But if it goes higher, you'll at least generate income in the meantime. So you wouldn't miss out.
And we're back to frozen.
Sharing is too difficult. Yeah, sharing is too difficult. Too much bandwidth. Anyway, so those gap downs on earnings, like next week, we have.
Man, we got to get his Wi-Fi fixed. All right. Do you want me to pop in for a second? Well, we can let him
yeah, I was just gonna, yeah.
Okay. I also am a big fan of Earnings Hub, and I actually have it up right now. So if you want, I can go ahead.
Yeah, go ahead and pop that up.
Yeah, I can share that, and we can go over it a little bit because there is still more to come, and honestly, a pretty decent week of earnings. So let's go ahead and get this going. All right. Can you see my screen?
Yeah.
Okay, cool. So this was this past week, but let's fast forward to this coming week. As you can see, Monday is going to be relatively light. Honestly, I don't think anyone's paying attention to any of these companies besides PDD Holdings. PDD, of course, a Chinese name over here, pretty much flat this year, but up 88% over the past year. This will be interesting, but it's also pre-market on Monday. So I don't know if it's going to give us the most information. We have to get that earnings call in, but PDD does move on earnings. You could see, last earnings, it popped up to 52-week highs, maybe even not quite all-time highs. It's been a little while back since there. But let's walk through where we get into the real meat and potatoes.
Can you guys hear me now? Am I back?
Yeah, you're back. I'm actually sharing my screen on Earnings Hub right now, which maybe will help if you're not screen sharing as well. Can you see my screen, Shy?
I could, yeah. So Wild, I spent $200 a month on Wi-Fi, and clearly that's not enough. So do better, AT&T. LA's Wi-Fi sucks.
Oh, shout out. Crash AT&T. Tag them.
So going on CrowdStrike. Listen, if they take down their guide or they guide down significantly, it's going to tank. Like it's going to retest the 200 lows. Because right now at 275, it's being priced for a slight decrease, but not a significant one or a complete removal. And there's going to be volatility associated with that name. So wheel strategy would be perfect on a CrowdStrike that you want exposure in it, knowing this is going to be short-lived, this black eye that they're experiencing from the outage. This is a great way of learning the behavior of the stock, learning how it's going to react to this kind of black swan event while taking advantage of getting income in the meantime. Like that's another way. Lululemon, shit show. It's been an absolute shit show, but some might argue it's still a premier product because it was a first mover advantage on that kind of athleisure, but nobody really knows when the bottom is going to be on that stock. Wheel strategy again. If they dip even more after their earnings next week, there's going to get stupid valuation. It's going to get pretty stupid, but it's in a stage 4 breakdown on the chart and nobody wants to catch a falling knife. This is a great way of playing that. Another one is Ulta. Ulta is struggling before Daddy Buffett bought the stock, and now it's shot up, but it's still nothing's different about the stock except for one person buying it. Fundamentally, it's still kind of going through their hurdles, but the thesis for Buffett is during a recession, he's angling for a recession. That's what he's doing in his book in past quarter, in my opinion. So if there is going to be a recession, there's something called a lipstick method where like lipstick products and like beauty products do generally well in a recession because I confirmed this with my fiance. You can't afford if you're struggling for cash, you can't afford all the different classes to get in shape or to do all the beauty products and injections. Like you can't afford that. You go on the makeup route and you do more than usual on the makeup. And that's where Ulta Beauty would benefit off of. So it is a recessionary play almost. So that's where, like, again, Ulta is really cheap, but cheap can always get cheaper. And if that's the case, wheel strategy. Or another one is, the list goes on. Like, that's what I'm saying. Like, if you're intrigued by the company, but it's in a stage 4 breakdown on the charts, and it's just gapping down 15, 20% after their earnings, the volatility would be elevated in that name, much higher than the mean would generally be the case for that name. The wheel strategy is the way to generate that income until you figure out what do you want to do with that position or how the stock price, like their characteristics are, because every stock has an absolute different characteristic than another stock. And if you monitor it every single day, you'll learn those characteristics, and the wheel strategy kind of pushes you to focus on it, and you start realizing their behavior. Like I know Snowflake's behavior very well, unfortunately too well. So like that's why I'm not adding right now, because it's gonna probably hit 110 and hit the psychological level $100, even though I think it's dirt cheap. It's really cheap right now. So that's essentially my 2 cents on the wheel strategy. Like it doesn't just have to be you want us to make income doing this investment route. It could be a precursor to potentially buying a stock. Like there's multiple angles of what
I never looked at it from that perspective. I actually really like that. Like, because again, cheap can get cheaper. I like it as a way to kind of buy insurance against building a position.
Yeah, some really interesting stuff here, and I've just been clicking through. I think people can see this screen, right?
Yeah.
I've just been kind of poking around as you've been talking about stuff. And CrowdStrike would definitely be a really interesting one since they just had that big drop off, right? And so you definitely have some elevated premiums there. I love looking at this chart right here. Just CrowdStrike, beat, 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 beat. Haven't missed a single time in years on EPS. Love seeing the revenue go like this, because it's really interesting when you look at something like this and then you look at Alta and you see how Alta, it's not looking like that. And
yeah, we went short Alta 550. Look at that chart. Bada bang.
Wow.
Yeah, that's really come down. CrowdStrike, like you mentioned, NVIDIA, then of course, balling out on earnings. Such a wild revenue chart when you look at it right there. EPS, beat, 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 all the way up here, which has been really nice. And then a few of these others too. So yeah, this is a really fun one to come and poke around in for those that are just kind of looking at stuff. And then obviously on Wheel, you're not going to have any earnings or anything like that, but you can also still check out price. There's no news yet. Oh, looks like Jordan grabbed a little bit of Wheel in his Savvy portfolio, but just some cool things to keep an eye on.
I actually might buy some. I have a 4% cash position. Maybe I'll buy some in the meantime until I figure out what to do with that cash position. Thinking like, again, I know volatility spiked right now. Like take advantage of that, and maybe that 4% position will turn into a 4.5% position by the time I make a decision on what to do. Like that's, again, I'm not buying anything like unless there's like stupid discounts. I'm not spending any of my cash the next 2 months. Like I'm just not. Like unless like I just like if I fully believe in the seasonality weakness, like I said, the multiple facts, like why buy when there's like a 5% dip or the market's down 1% one day when it could go down 4 or 5%. And then we haven't really experienced the fear in the markets really. Like, we've experienced some fear, but like 2 weeks ago, all that fear from those 2 or 3 days, that should have lasted in a normal time, like 1 or 2 months. That all happened within 2 or 3 days. Like Qs went down 16% in less than a week. That does not happen. It just does not happen. It's usually way more prolonged. So that's unhealthy in my opinion. And I feel like we're going to go return back to just like maybe consolidating, but going a little lower, but maintaining above that 21 EMA on the weekly chart on SPY. Like we're just going to be hovering around that area. Like I don't think we're getting into the bear market. No way. We might correct, but I really doubt it. Like I think the SPY, look at the SPY chart. I really think we're going to touch 540 sometime in the next 2 months. We're going to hit that, in my opinion. That's the 21 EMA. Will we retest the will we test the 200 SMA? I don't know. Like we haven't retested the 200 SMA on the daily chart since this rally started in October. So are you going to tell me the whole year, almost 12 months will go by, we won't retest the 200 at all? That's so hard for me to believe. Like I really think there's going to be something that's going to happen in the market that we're going to slice through the 21 EMA potentially, and it's going to be an instant magnet 200-day moving average, which is right now at 510. That's not even the end of the world. Like if we hit 510, I think the market's still going to be up over 10%. Like that's like the worst case scenario, in my opinion, is 510. And even then, that's a really bullish year in the market. So like Yeah.
I agree. So what I think I would like to see that would make me feel a little more comfortable is I do think we'll approach that original target we gave you guys, like 575. But then I think we're going to trade right along this band, and we're going to find these little consolidated support levels because, like, dude, look, we've had no sideways. We've had no consolidation. We've just had rip and dip, two settings. Markets don't work that way, guys. They don't.
And
So
also the
short-
V-shaped recovery is thin. That means it's not going to hold if the market pulls back. Like there's no volume on that V-shaped recovery, really.
Right. Well, here's our volume right now. You can see it right here. This is what we're working with. Look at that right there versus what we had been getting. So if you look at this as like an average volume right here, right? We did get a little bit here, but then it has thinned out significantly, which is what scares me. We should see those boomsticks right now coming in right here, and we don't see them, which tells me that they liked the 510, 511, but they don't like anything else, which means that tells me at least like, okay, positions are being built over time, but they're not ready to ride yet. So again, we lost the most important trend line we had, which was like, this was like our Forrest Gump running the marathon line right here. This was like true gumption of just upside abound. We have no idea how high it's going. Let's see 600, done and done. We fell below that. Now that has turned over to become our functional resistance line. We V-shaped up to it. I never liked that. If you V-shape and then you beat and now we're taking our previous support, that's high degree of confidence for me. But when you V-shape and now you're trading below that and is now resistance, that's telling me that's like that's artificial, right? Like it's a quick pick me up, but it's not going to move us over the line. Does that make sense?
It does make sense. And there's also like there's so many tools you can use to justify the market's behavior. Like the clear leader of this market is Nvidia. What has happened to Nvidia every time it's hit 130? It's pulled back. That's essentially telling me like the market, the V-shaped recovery, like it's not really ready to take off because the clear winner and the leader of this whole market isn't able to get past that 130 wall. Like it's a clear resistance every time. That feels very toppy to me. And if for Nvidia, but Nvidia is really taking this whole market on their shoulder, especially next week. Like that's just like an indicator that market's not really ready to test those all-time highs because Nvidia really can't cross that 130 wall that's it's experiencing.
No, I agree. And what with Nvidia that is a little spooky to me is like, so you see right here, okay? This was our opportunity. So that was what, August 19th for Nvidia to retake the crown and then test for 140. Because again, this is Nvidia's kind of Forrest Gump range there above this trend line right here. That's where we're testing 140, pushing new highs. The fact that it broke and then immediately opened lower next day and then tested, failed, and came down spooks me. What makes me even more, I guess, anxious about it is that it then opened strong, pushed, failed, and then go to Thursday, huge sell-off, and now today we picked it back up. But again,
lower high
does not speak to like breakout incoming to me from a technical standpoint.
Full disclosure, I sold 10% of my Nvidia position today. I think the pullback is. I think first I did $92 cost basis. Everyone on my Discord group, you guys saw my screenshot of my position. Like I'm up 40% in a matter of weeks on my Nvidia position. It was a top 5 position for me. I was like, after everything happened with Snowflake, I had to be more defensive on my cash position because I have a 4% cash position. I really want that to be elevated to high single digits. Nvidia's earnings next week, if they don't deliver, it's not just the Nvidia position that's going to suffer. My whole portfolio will go down significantly because I have a very growth tech portfolio. So I took some off, seeing that it's pulling. It's not clearing the 130 level. Feels like it wants to retest that 115 range. And if that occurs before their earnings, fine, I trim. But I just think for Nvidia to go, like, I would much rather Nvidia be at 120 than 140 when they report their earnings next week because earnings are all about perspective. So like if Nvidia's at 140, they don't have to just deliver great results. They have to deliver godly results, not just perfect, like blowing everyone out the water results. And will they do that when Blackwell chips are delayed and like there's a lot of geopolitical uncertainty with China. The list goes on. Like I feel like they might be more on the conservative route on the guidance. And if at 140, I think there's the risk outweighs the reward on what they're going to do after their earnings sprint. However, I'm underwriting they're going to deliver great results. Stock price might not react in the way you'd think, but it's going to be like a 5% pullback, and it's just going to consolidate in the 110 to 130 range for throughout the seasonality weakness period. That's just my bet on what's going to happen.
Yeah, that would fall exactly in line with our. Let me kick this back to the weekly, but I couldn't agree more. That falls exactly in line with our range here of this trading up. Again, remember we extrapolated out and we set our long-term target here 170 by at least March of next year. That would allow us to just tightly consolidate and trade right in that range for the next couple of months without any question or any issue. So I love that. I couldn't agree more. I think that's exactly what we can expect to see. So let's move it over now to definitely an outperformer, someone that had a very strong day. Looks like it sold off a little bit of it, but Thessalonius Jackson here, looking clean in the range. Looking clean in the range, clean and clear. Over 230, 266 is on the horizon. Now, I guess Stocks Buddy and I are in disagreement that we went bearish here. But I guess really it's just saying pivot is 225, which I do agree with. If we flip to the weekly and kind of look at a bigger perspective here, pretty much the same thing is reflected. So for those of you guys using this indicator, keep in mind that when Stocks Buddy gives you a stop loss or a pivot point, I would trust it, especially if it happens on the daily and the weekly. So basically it's telling us that if we don't see strong momentum over 225, 228, we're not going to see more upside in the short term. But on the long term, I do believe we turned over when we gave you this one at 140. That was our most local bottom. We saw a support test right here. This was our buy. We gave it on the stream in April. Stocks Buddy kicked over bullish at 200 and has maintained with a stop in place of 166. So that's what I would do as far as the Tesla levels here. Again, this is the monthly chart. Take a broader perspective with a big name that, at least for my case, I'm going to be holding for a significant portion of time.
So,
any thoughts?
Yeah. So if you guys remember on Trader's Paradise, I said that Tesla is going to be a great rate cut is coming narrative player, because what's going to happen when rate cuts occur? Consumers are going to feel more comfortable buying cars because that monthly payment is a lot lower, with interest rates being lower. And as an EV market leader like Tesla, they're going to benefit the most out of anyone. That's what happened today. Powell's Jackson Hole essentially told us we're getting rate cuts are happening. And once that occurs, that's officially the end of higher for longer interest rate cycle. Like that cycle's done with. Now a new cycle begins that rate cuts are coming and happening right now. That's a completely different behavioral change on consumers, SMBs, even the dealer. Like everyone's behavior will change knowing that rate cuts just happened. More is coming, so we can be aggressive again. So that's why you saw Tesla catch a bit today, and that's why you saw a lot of small caps catch a bit today. I think IWM was up 3% at one point. I don't know what it finished at, but
we can get it back.
Yeah, that was strong.
They had a big day.
Big day. So like that, again, like knowing these characteristics of what's going to happen when we called it out 3 weeks ago to you guys, like rate cuts occur, all these things will happen. And DigitalOcean, for example, new 52-week high today because bread and butter is SMBs. Like all these names have exposure to SMBs. Will catch a bid. And that's what we saw today. But Tesla's at a really unique point in their journey because their 10/10 event is 2 months away. But you're smelling the fear from potential companies that are going to be disrupted from that robo-taxi event. Uber this week announced a partnership with GM on their EV line of like, oh, partner up with us on your EV. I'm blanking on the name, Gob. You probably remember. What's their automated GM? Cruise. They announced a partnership with the Cruise. Essentially getting ahead of this 10/10 event, telling everyone that, listen, like whatever they announce, that's fine. We have our own plan. We're partnering up with the shittiest, worst autonomous company, but it's Cruise. Just want to signal to all our investors, like we have a plan. That's, for me, indicating they are spiraling because they have no in-house technology, autonomous technology, Uber. The best thing they could do is use their network and platform to connect with other companies who have that autonomous technology. That's the only avenue they have. But at the end of the day, that's minimal pricing power leverage that Uber has. I think they're going to be in trouble. And that's what they're indicating this week, in my opinion, by partnering up by far the worst autonomous technology in cruise. Like it's not even just like it's Tesla 1A,
Yeah.
Waymo's 1B. This is 4. Like there's like somewhere in between the Chinese stocks, but Cruise is the worst. Like just look it up. All the town leaves. Like it's bad technology. And Uber partnering up with them essentially signaled the white flag that this is the best we can do, and it's Cruise. And that's why you kind of saw like Uber shot up after hours in the news, then immediately had a 5% reversal because I think the processing in people's brains happened like Cruise, like that's not indicating any kind of confidence. So Tesla is. I originally said the 10/10 event might be a sell the news event for Tesla, but if Uber is doing this kind of partnership ahead of that, maybe there's actually going to be some substance that they're going to talk about in the event of like in a reality of what robotaxi and FSD will be and how disruptive they're going to be for autonomous driving. Like maybe that's the case. If so, $1 trillion company.
Tammy, shout out up 40%.
TNT, 40%. Nice.
I love that, dude. I love that. Yeah, I think that looking at, at least Uber, dude, I mean, they did have that sell-off, but it looks like they're actually getting some buying coming in, which is shocking. I think it's also important to know that, like, most people are just kind of like dirt around, and, like, they hear Uber, they hear GM, they go, oh, yeah. You know what I'm saying? Like, it's not – no one's thinking anything past that. So I could see that reflecting in the market until something material comes out. That is no bueno. But I would say that right now, I think that leading up to this event, this is fairly positive. I mean, I'm not too upset with the price action that we've seen. I think as long as it maintains, we could see 250 probably by the event. I mean, 246.5 was our kind of next target, intermediate target. But I think that's very possible. But what I'm interested in is pretty much what you said, dude. If they have something material, this thing's going to boom town. But again, big if. So you said something earlier. You said, like, look, for the next 2 months, I'm not touching it. I'm not doing it. Not putting my cash at risk. What names would you, and at what price?
Snowflake at $90. I would, no brainer. If Snowflake broke that $100 psychological
This is where you guys should take notes, FYI.
I'd go hard on Snowflake under $100, like 90. I'd go hard in MongoDB at 180. I would. Where else? I mean, if Nvidia breaks $100 again, that's a no brainer to me, in my opinion. Let's see some other names. I mean, Amazon at 160, no brainer. Cloudflare at $70 if it breaks $70, no brainer. Like I already have my list in hand. Like I'm not gonna go for the speculative plays. Like Unity, I think it's a turnaround story, but when there's a fire sale in the markets, I'm not gonna go for the speculative high risk. I'm going for the high floor clear winners that are giving this buying opportunity from a macro driven reason that's not company specific, because these elite companies, besides Snowflake, because Snowflake's going through a narrative issue, give you a fire sale opportunity only if there's some macro driven reason, like seasonality weakness in the market. So knowing which names are winners that don't give me the opportunity based on company specific behavior, I'm adding to those names. Like Jumia, highly speculative. I'm not adding if there's any big pullback. Rocket Lab, I love them. We're not even, the space economy is like batting practice, not even the first inning. So like that's highly speculative, not going anywhere, not adding to that. Global E and DigitalOcean, I have a healthy position in those names. They're both under $5 billion. There's some SMB and European recession exposure to those names that might be massive headwinds. I'm not adding to that. Like, know which names you have your highest conviction, or even the names that you missed out on that you want an opportunity to participate in, because we're going to get that opportunity, in my opinion, the next 2 months. Like a lot of these names are going to retest their 50-day SMA. They're going to retest their 21-week EMA on the weekly chart. They're going to retest those levels. So if you have a list, come up with 5 to 7 names of names you want exposure in. Then next to those names, keep track of these key levels like the 21-week EMA and the 50-day SMA on what the prices are. So when those dip opportunities occur, you'll add instantly. During that market tantrum on Monday 2 weeks ago, I scooped everything up probably within 2 minutes. Like all my cash position, 20% margin, all happened within 2 minutes. It's because I had a game plan and I took advantage of that. And right when the market opened, it just took off and never looked back. And I was able to capitalize on that alpha because I came ready. I came prepared, knew exactly what I wanted, and it proved fruitful for me, and it could prove fruitful for you guys once this volatility occurs in September.
Amazon at 160, getting some more Jeffy stock. I would love that. Really quick, Unity, Boomtown. Did anybody scoop this up sub 15? Hit that chat.
I added 100 shares sub 15.
That's what I'm saying.
To my position, my cost basis is $17, but I added
I added a few because I honestly just kind of went a little big boy at 16, and I was like, you know what, don't get out of control here, guy. But I do love this chart right now. Like, this is making me feel tender things in a wonderful way.
I mean, it's going to $25 soon.
Bada bing, it's right there. You read it here first. But what was the name? Oh, we were just talking Amazon. Yeah, getting a little more Jeffy stock would be amazing, dude. I am most disappointed in myself and my poor, just sucking that I didn't get any 150s. Like, it's really bothering me daily. It bothers me daily. I didn't buy any more 150s. My cost base is under $100. I'm satisfied there.
Look at their chart. This is basing for 4 years now. This is the only Mag 7 name that hasn't really ran, but I can make the argument their business has expanded and their mode has expanded, and there's multiple growth avenues now. So like that spells opportunity, and that spells of clearly the only pullback you'll get in this name is a macro-driven one, and you have to pound the table and add with 2 fists on this name because I really do think they're going to be battling out with NVIDIA and potentially Tesla, but more like NVIDIA for the first $10 trillion company. Like, I really think those two companies will be the most valuable. Apple is going to be like 4 or 5 trillion at most. Like, they're not the same kind of level of growth. Just if you have that in the back of your head, like, there's a ton of runway in this name, and like it's been basing a while, and it won't take much for once it breaks $100 and Poppy Bezos stops doing the sell program. Like, once it takes off, like 2 to 250 won't matter that much in this name because it's the most undervalued among the Max 7 names already right now, excluding Meta, because Meta has a ton of issues, that regulatory issues that they'll never get over, and it'll always be an overhang, and they won't ever be properly valued correctly. So I'm excluding Meta from that comment, but Amazon, from the Microsoft, Apple's, Google's, they're by far the cheapest among all those names.
Yeah, I couldn't agree more. So of all those names you mentioned, if you could only pick one, like, so if King Wolf here could bang his trident against the floor and sink the markets, what would be the one name if you had to pick one of all of them?
Palantir. Palantir.
Ooh.
You think
if I can scoop up Palantir at $22, $23, I would exit probably 2 or 3 positions and go hard and
sell your kids.
I would make this a 15% position. Like, this is telling me everything it needs to, that this is going to be the leader in the AI space. Like I said, a couple weeks on our Traders Paradise, I was preaching at $23, $24. Like, this is going to take off. And when it does, it won't look back. It won't. Yep. It hasn't since. And once you see like the momentum occur, the scalability, where like they make $3.2 million per customer right now. Imagine if their customers start turning from 300 something right now to 500 to 1,000. Like, the scalability of their business model is absolutely wild. Snowflake's a great example. Snowflake makes around 400K a customer. What does that indicate? They need a ton of sales force and headcount to support all these customers, because they have like 3,000 or 4,000 customers to make the same amount of revenue as Palantir does when they only have 300 customers. So once that, there's a ton of enterprises out there. You guys all know there's like thousands of enterprises. If this becomes a go-to AI operating system for enterprises, the scalability of how much revenue they'll make they're making $3 billion right now on 300 clients. If those 300 clients turn to 1,000, which is not that ridiculous because there's a ton of enterprises out there, you do the math of how much runway they have in the immediate time. Like, it's wild. That's why I'm saying, like, it's like, I hate it. There's a cult following, and I don't generally love investing in a company that has a massive cult following, because a lot of times when a lot of people are on one side of the ship, it sinks. But this is one of those cases, like, the fundamentally and thematically, they are elites, and it's just all correlating at the same time right now. So to answer your question, $22 is, wow, load the freaking boat. Get a hard money loan. Get a I'm joking about the loan, but like, I'm just showing, like, I'm so bullish on that 22. But realistically, probably retest $28, and I would add a $28. So if we get a seasonality pullback in the market, $27.50 to $28 is my load zone, and is where I would just increase my position.
Dude, that one is still blows my mind that it was trading at $7-8 when I was buying it. It's just unbelievable that it could even be there post IP. I mean, it went to what, 45.50, and then just completely cratered when the value is there. And it's not like, guys, we've been telling you this a long time. It's not like the value was created in the last 6 months. I mean, you just had to kind of see the forest through the trees, I guess, to see it. So
this is a great story. So what Palantir experienced in 2023, Snowflake's experiencing the same thing right now. What do I mean by that? Palantir back then had a narrative issue. They were funding the Eastern European wars, black box consulting company for the government who just like puts their eyes on everyone in the world, and there's privacy issues, blah, 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 blah. Those are all just FUD in my opinion. But they had a narrative issue, and they were punished for it being traded under $10. Nothing about Palantir under $10 is different than what they are right now, except for the AIP bootcamp, which is tackling the commercial side of the business, which is a big difference. But would you say it's a 5x difference? I don't think so. It's a narrative issue. So narrative follows price action. Now that Palantir is at 30 plus and it's like up 90% for the year, people are understanding the vision, and it makes sense to them more. Under $10, nobody will listen. Snowflake has a narrative issue. I don't know if they have the right CEO to communicate their AI vision. Back-to-back quarters on their conference call indicates that he has zero soft skills ability at all. Doesn't matter how much of a genius he is. If you can't communicate the AI vision, what's the point of having an elite product? That's something I'm asking myself. I'm giving him a long leash. But everyone's doubting Snowflake right now, when really all they've gone through is a valuation compression. That's it. They have the same business, same thesis, same moats, but the narrative's changing because the stock price is down 45% for the year, and it's all-time lows. So narrative follows stock price. So people aren't believing there's long-term moat or advantage anymore because they're looking at the stock price. That's where like people are schmucks, in my opinion, and are short-sighted. Everything that Snowflake is experiencing is short-lived. I really think if you're handling a 5+ year portfolio, adding below 120 is going to be just as fruitful, if not a little less, than Palantir under $10 in 5 years. And that's what we saw Palantir. That's how I'm like tackling Snowflake in 5 years. Like, I'm not adding more because it's a 10% position for me, but I think Snowflake being at a 60% discount to Palantir right now, at a 30% discount to Datadog, which has a much lower ceiling than Palantir, Snowflake, shows you how cheap it is fundamentally, and just a narrative issue that they might not have the right CEO in place, but you have to give them at least a year to see what kind of products he gets created with AI.
Yeah, no, I couldn't agree more, man. I think, it's one of those names everyone's going to look back on in a number of years and say, man, why didn't I have that one? You know what's interesting? It's when I'm at the gym. So I go to this gym. It's like, it's more, I like it because it's mostly old people, if I'm being honest. It's mostly old people. So it's like they have a nice sauna. Things are very clean. Like I enjoy that. So I get to hear a lot of.
I'm sure your wife loves that too.
Oh, I'm sure she does as well. So I get to hear a lot of boomer rhetoric. While they're like, because they have a little TV station in like the lounge area with the TV on. It's always on CNBC. shout out Crames, but they're always watching some shit like that, and they're always just like, this Nvidia, where did this come from? Like, I'm thinking of buying some now. It's like chugging up 15x. You know what I mean? Like, I'm talking prime time by the top type of stuff. They're like, how come nobody knew about this? My advisor didn't tell. Like, I heard them complaining about it, and it hit me. It was like, damn, we all really do have an edge. Like the kind of main, I guess, mainstream media perspective, I guess, type of deal is hopefully not. It's not the future. I mean, boomers left us holding the bag, but I feel like in some ways there are advantages that we have that won't be recognized until 10, 15 years from now, where hopefully we could be in the same position without leaving a shitty bag for the rest of them. So I don't know, but I just found it interesting. Like, I always hear them. It's like Tesla, Nvidia, Palantir. They're seeing all these names, right? And then they're just wondering, like, I've never even heard of this company, like thinking that it's going to be, Apple. It's unbelievable.
Well, boomers, like, I want to knock them down, but they only understand things that they see in their everyday life or they can touch. That's why Coca-Cola, Pepsi, like these consumer products, they make sense to them because they can see it in front of them. Tesla makes sense to them because they see it on the cars being driven.
They see the cars. Yeah.
Snowflake, Palantir, business intelligence and big data analytics, they can't see that in front of them. That's like, might as well talk in French because they won't understand it. Like, that's why I want to talk down on them. But like, I think that's the disconnect I realized when I talk in my boardrooms to a lot of like the older folks on the team. I have to explain things. I have to handhold them a bit on the new strategic initiative that our company's doing, etc.
RIP Carl from corporate.
Do you think it's the meta then that's kind of left unsaid?
Yeah, 100%.
Interesting.
100%.
You got any boomers in the chat? Comment the number one if you're.
I don't think Chag is a boomer. Do you think so, Austin?
Oh, Chag, you're Gen X, aren't you?
He said he would understand. I don't think he's a boomer.
Yo, someone said.
Oh my God, TMDX!
Oh.
I forgot TMDX. It hit all-time highs this week.
You put it in.
I was putting it in, then you're putting it in. Look at that. Don't forget TMDX. I was shy of Porsche for that call. So, Swan, if you want to, you can make the checkout. Let me put my name up there. Austin, I also would enjoy a nice Porsche.
Oh my God! I'm only up 13,000 on my Transmedic, so like, I can't even pay.
Austin and I both already have very nice vehicles. So if you really want to give someone a car,
who's to say who has what vehicle?
Probably the guy who doesn't have a car right now.
I was gonna say I'm pretty sure Oz has the same brand as what Swanton just offered me.
Well, we don't know who has what. And also, some of us just don't have a car by choice.
Have you? Okay, yeah,
it's not a mechanism of can I afford it. It is.
Wait, you don't have a? I don't have a car either.
No, you don't have a car? Talking about? I saw that delightful old age.
That's his girlfriend's car.
That's my fiance.
I bought it. You're like the football player who got divorced by the girl, and she tried to come for all of his money. He's like, actually, my mom owns all the assets. They're all in her name.
Well, I can't drive stick, so that's why I can't even drive her car. It's too hard.
You don't have a car?
No. I live in the city. I just like Uber everywhere.
I've just always lived in the city. I've never had to buy a car. I've never actually owned a car.
That's wild.
Yeah. Wow. Everyone else around me has cars. I've helped other people buy cars.
It's the biggest life hack not having a car. You don't have to drive anywhere. You don't have to worry about like DDing. Like you're just like you're there for the ride.
The house I live at, there's 3 cars already from other people. It's like
So here's J Dash. My father's older than a boomer, so 92. I don't know if that's silent. Isn't that silent, Jen?
Wait.
You got to Google this. You got to look this up. I think that's silent generation. This is the most impressive thing I've ever seen in my life. This is true.
All right. The silent generation is the generation born between 1928 and 1945. So yeah.
Bro, so he got into NVIDIA at 87 years old and 4X.
Also,
that's a 1% of 1% of
also known as the traditionalist generation.
Oh, okay.
Yeah. Nice. Good for him.
Yeah, that's a big one.
He's like Warren Buffett out here making 90% after age 65.
Rick, how you living?
Rick is
You own
awesome.
any of those?
He's in my subscription group. He is awesome. You did not look 66, Rick, when I look at your
Pick a
profile
Rick.
photo.
Pick a
You
Rick.
look great.
He said, "This is Rick." Just the way you wrote that, message, Rick, is beloved. I love that.
I feel like that's not very boomer though, because no boomer is going to use YO for years old. So Rick, you may have the age.
YO was pretty good. YO was pretty good.
But I'm going to claim you for millennials. I feel like that. I'm going to claim you as the millennial class of people.
Wait.
And Rick, you ain't no boomer. Come on now, Rick. It's no big deal. I just have 1,000 shares of NVIDIA.
Damn.
It's just something I have in my backpack.
You guys are both millennials, right?
Yeah.
I missed the cutoff.
The best generation is what you said?
The most fucked generation, sure. But yeah.
I mean, you use social media, don't you? Isn't your whole
I'm a
kind
Gen
of
Z.
deal built off of a millennial idea?
No, I'm a Gen Z.
Phenomenal platform. I know what I'm saying, but you got Jack Dorsey to thank, don't you?
Jack Dorsey's not a millennial. Isn't he a boomer?
No, what? He's like maybe 40.
Jack Dorsey.
He's way older than that. I mean, his beard is
47. He's 47. He was born 1976, which is definitely not a millennial. There's no way Jack Dorsey was born way before. Millennials are 1982. He was born in 76. He's Gen X.
Still. Can't cuck the Zuck, though.
Zuck is probably a millennial.
Oh, he's 100% millennial. I think he's our age.
No, Zuck is like 40, no?
No, I thought he was
he's exactly 40 years old. I nailed that on the
damn. So I guess I'm doing better than I thought. I thought they were all like my exact age. I was like, damn.
1984.
Why didn't I start a fucking groundbreaking tech company when I was at Harvard or wherever?
Wait, we got another one. Dog water. I own a lot of MAGA. I'm sorry, is MAGA public?
No,
like
wait.
Mag 7?
Wait, Bull is Gen X? No way.
Bull's Gen X, yeah.
Really?
Bull.
I think he was a millennial.
Yeah, that's interesting.
Yeah.
Wait, Dogwater said, I think he means Mag 7. I don't know, unless he owns
Point
MAGA.
Bridge America First ETF. Maybe he does mean that. I don't know.
Wait, is there
It's crushing. I will say it's crushing. So, well, look, let's go to the.
That would be so funny if it was a MAGA ETF for just gun makers.
It's not
that
bad.
would be really funny.
Dude, this thing's been around since 2017.
Yeah. Well, that was probably the first run.
Yeah, wow. It's up 90%. Not too shabby.
Nice.
All-time highs. What's it hold?
Yeah. Beautiful.
Constellation Energy, Global Payments, Robinhood. This is really interesting. It owns a ton of companies. It owns less than 1% of everything. There's like 150 companies in this.
So it's like a wide mode kind of deal?
I guess so.
Shai, do you own any wide mode stuff?
I do too much work to own ETFs.
MAGA tracks an index of U.S. large cap companies whose employees and political action committees are highly supportive of Republican candidates.
Robinhood's in there?
They track, Robinhood's in there. So I guess they track donations.
Vlad's a pub.
Shout out Vlad, by the way, follows me on Twitter.
He does? Nice.
Yeah, Vlad Tenov is one of my OG followers, actually.
Really?
For like 3 years. Yeah, we follow each other. He only follows 721 people.
Well, hit him up and tell him I want one of those gold cards.
Yeah. Shout out the Robinhood.
Tell him, yo, I got a friend who's got it.
The Robinhood account comments on stock market news and stuff all the time.
It actually looks attractive. Isn't it 5% plus you get the card? I think it's 5% cash. Is it not?
There's no way anyone's doing 5% cash, maybe 3%.
Well, you're the card guy.
No, Robinhood does 5% back on travel.
Okay, on travel, but that's a little bit different than just cash back on
3% on everything, yeah.
Oh, we got a youngin'. I like that. 22, kind of new laws. Where should I do to grow my money on the market today or in the near future? That's a great question. I think you're in the right place. I would follow all these accounts. I mean, this is where you're going to get the best information on the picks, on the strategies, on all of it. But I would say, like, you have the most valuable asset of any of us, which is time. Stay in the game, make smart and considerate decisions. Take a little more risk when you're young, but most importantly, just stay on top of it as it evolves and get yourself into trading, because it's one of the, In my opinion, it's one of the easiest small businesses you could start with very little money and very little experience and actually be profitable. So take it for what it's worth, my friend. Join the Discord. Let's get you in there and get you some of the free education classes, man. I think that's where you start. You start with education, you do very well.
It's a good place to start. Everyone's like, what should I buy? But they should really be asking, what should I learn?
Ooh, that's a cold piece. That's a good one.
Real close to the camera for that one. No.
Oh, wait, hold on. Say it one more time. Hold on. Whoa. Say it one more time.
Everybody always asks, what should I buy? But really they should ask, what should I learn?
Boom. You heard it here first.
Off the dome.
That dad juice, dude.
Angers only.
I like that, dude. I really like that. So we do have one question here. I heard you mention Net. Curious if you think their future is a standalone company, or will they need to acquire more companies to offer more to customers?
If they want to get into cybersecurity, the more security front, yeah, they have to acquire companies because their SASE is like not really that revolutionary in my opinion. But the SASE is very competitive in the private market, so I think they can. Really, I value them as a CDN, a content delivery network, and I think that's going to be even more invaluable, especially after Apple Intelligence starts gaining scale because they're essentially powering that. So that's why like that's a sympathy play towards if AI is actually a reality in Apple. But yeah, they will have to acquire, and I think they probably will down the line because I think cybersecurity is there's just so many different vendors, so many different options that it's going to go through a massive consolidation next couple of years. And it feels like SASE will be one of those that will get scooped up by Cloudflare potentially. But having said that, like Cloudflare is stupid expensive, but it's one of those companies that already cemented themselves in the modern AI tech stack that they deserve a premium valuation, that any kind of dip that's going to be macro driven, like I said, should be scooped up because they already proved to us they're not an AI story. It's a reality, and they're going to have a premium and participate in this thematic for the rest of the decade. And there's only a handful of those names that can say that. NVIDIA, Palantir, Cloudflare. I can't say that for Snowflake. That's a theory. I can't say it for MongoDB. It's a theory. I could say it for Microsoft. I won't get into that one too much because I know I said something to Trader's Paradise, something's coming soon about that one. But yeah, NVIDIA and the hardware names, all those are proof of it. So that's why they're catching bids easily. So to answer your question, yes, but not on CDN. It's going to be something specific on security.
And just speaking of that chart, we talked about that $70 level being pretty critical. If it holds, that was the buy. And as you can see, you're getting some pretty decent volume here off support. So this could be an interesting place to initiate a position, actually. Believe it or not. Let's see what Stocks Buddy says. Ooh, Stocks Buddy's still a bear until we cross 88.
In that case, buy some puts. It does not belong above. It's like weird. It doesn't belong above $85, but you want to scoop it at 70. Why is that? That's like such a tight range. It's just you. In this, once we take off in the market and this AI thematic, it really like take off, which means that application layer is being validated that it's hitting that layer of the thematic. I don't know what the valuations will be for the handful of clear application winners. Like I just don't know because nobody knows the ceiling on what AI is. But if you're benefiting off it, they might offer a stupid valuation, like stupid high valuation. So that's why like, I want to scoop it at 70, but I would do an immediate hedge at 88, 85 to $90 just because like it can only go up so much, but it'd be a tight hedge, like very tight. Because this is a name, as you saw, like 2020, 2021, like it flies when liquidity is there in the market. Like it really does because it's such a premier company.
Yeah, I couldn't agree more. So there it is. We're up against the top of the hour here. So we're going to wrap this up. In short, in summation, a big thank you to Peerless for sponsoring this little event we do here. Again, we love it when we get the chance to work with, like, honestly, just companies we believe in that have products that actually work, that are things that we actually use on our own. And this is one of them. So you can check that out at WEEL. That's the ticker, or go to peerlessetfs.com. Feel free to go there and check it out. Do your own due diligence. It's not financial advice. None of us are advisors. We are simply showing you what we do with our own money, and you can take that for what it's worth, follow or don't. Our goal is to give you insights and action items that'll help you become profitable, because again, if you're not trading, then you're falling behind and inflation is just gobbling up your money like the fucking cookie monster that it is. So don't do that.
Yeah, I actually had a quick tweet that I put out this morning just to put it in perspective for people. If you look back, I'm using $1 million as like a nice round number here, but $1 million in 2000 now equates to 1.826 million. So $1,826,000. So pretty
Your
wild.
buying power's half.
Yeah, half.
Does everyone understand that? That means the same amount of dollars, it requires twice as many now to buy the same items. So basically, they've cut your money in half.
24 years.
The best hedge against inflation is participating in the capital markets.
Ooh, hold on. Whoa, now we're gonna give you the spotlight. That's a cold piece too. Get it in there. Come on now.
The best hedge against inflation is participating in the capital markets. That's why if you're raising cash in your bank or raising in some safe in your house and just sitting there, essentially you're losing money because inflation is eating at it. And in order to remove yourself from losing all that inflation dollars against what your capital is right now, participating in the capital markets will unfortunately, the way capitalism works is they benefit off of inflation in really weird, hyper-specific ways. But like, your dollar won't be at the realm, at the tax of inflation if you participate in the stock market. Just my 2 cents, but that's where I think is the perfect hedge against inflation. Like, I fight it against my siblings because they're very risk averse, and I show them that. Some didn't participate in the market in 2020, and they thought inflation was just like a mythical thing they see in the grocery store, but they don't realize how little their cash is actually worth 4 or 5 years later. But if they participate in the capital markets, it could be a completely 180. It's a massive compounding choice that will be you'll feel regret, and honestly, in 10 years, if you miss out on this like bounce that we experience, or you don't see the compounding nature of what your capital can do if you participate in the market, where you just see it sitting in a pile in your closet and just knowing that it's worth less and less as time goes on. It's a worse feeling. Don't do it.
I couldn't agree more. It just when you're saying that, I don't know, man. It's property values, right? Good example. So this is another element of it. It's like your money's becoming worth half. You could buy half as many things as you could then, but then also the valuation of the things themselves is double. So I was thinking about it. I was like, wait, it's not even half. It's a quarter, if that, because the valuations on the most important things, your home, your transportation, insurance to protect those things, all of those item line expenses have gone up 3-4x. I think like the CPI was up like 180% the last time I checked it. So like that's your consumer, that's your grocery store, your basics. But like that doesn't even talk real estate, doesn't even talk goods and services. Why is my insurance double what it was 4 years ago? Double.
Wow.
They just hit me up, Blue Cross Blue Shield, which shout out Blue Cross. They just hit me up and told me that the premiums jacked 25% year over year. 25%. That is not like, dude, 4%, whatever. Okay. My wife had a baby, tears, I get it. You want to claw your money back, I get it. But 25% is insane. So you guys think about this. For all of you, for all of us, these are the things that bleed us dry and we don't even pay attention. That's not even to mention the DoorDashes of the world that are artificially inflating prices even beyond this extreme that we've mentioned, and then making you pay even more for convenience, which I wouldn't do it. We have a strict policy in my house. Only I shall DoorDash because I only do it when there's promos. Otherwise, you're paying roughly 30% to 40% more on those same items.
I need to use that in my household. My fiance just convenience. You can't put a price on convenience is her mentality.
Some cannot be trusted with it. We did a Taco Bell order in the Taco Bell app, and then we did it in DoorDash. It was a comparison of $79 in DoorDash and $42 on the Taco Bell app for an entire family.
It's also crazy when you do the difference between pickup and delivery, the amount that they change in the price itself, not just the delivery cost. I was doing a Chipotle order, and it was for delivery, it was like literally 2 people, and it was like $60 something, and I changed it to pickup, and it dropped to like 38. Even though the delivery fee itself was just saying like, oh, $9, they actually changed the prices.
Yeah, so DoorDash basically takes pricing power out of the hands of the restaurant. They can't specify, to my knowledge, they can't specify like a max ceiling. They literally just take it at the bottom.
Jeez,
it's ridiculous. So they could just go, you know what, let's charge. And I know they do testing on there. Like they'll test stores, they'll inflate prices automatically 25% just to test demand. So you got Senator Bergman here has a question for you.
What's up?
He's asking what he needs to buy. This is sitting senator.
How about this? I won't tell you what to buy. I'll tell you what to learn.
Oh,
I got you.
Own that. That's good. I like that a lot. Yeah. Sorry, dude. Sorry, but he bought some Bitcoin mining stocks. I guess we could really quickly go.
Bitcoin's taken off today. Did you see that?
I did see that. I heard about it. I didn't get to look, but I got to hear about it and see everybody else enjoy it. So CLSK, really unfortunate this thing fell off, but critical support here, 1130. This is a long-term pick for me.
We can't see your chart.
Oh, sorry. Full disclosure, my cost basis is like $3. So the way I'm trading this is much different from the way I would if I bought it at, say, $12. So this is a long and strong I'm holding on to until I die, probably.
So
go
again,
ahead.
I'm not a fan. I'm shocked that you like miners.
I don't. No. Hold on. I don't.
Crypto
I
miners.
don't. I'm a fan of
Whoa.
It sounded weird when I said that, but crypto miners.
Oh, yeah. Yeah. Well, ask Wolf. What did I just tell you? He was showing his
F in the chat. F in the chat for that moment. Yep.
Yeah, we gotta be careful with that language, dude. But yeah, so I'm a big fan of own the underlying. I'm with you, but that's one that I liked, that I saw a lot of upside, low float, quick trade, and then it just kept going, so I held on to it. So before you skewer me,
go to the BTCL ticker.
What's that?
That's it's a T-Rex 2x leveraged Bitcoin. It's actually like the best. That's what I use to capitalize on any kind of major move. It just got launched, but it's associated with like Bitcoin price pretty accurately. And like, I forgot what I think we just broke over the 200-day moving average on Bitcoin. And I think once we clear that with volume, Bitcoin's going to hit like $70,000 in my opinion, breakouts from there potentially. If that's the case, I'm using BTCL as my mechanism to really capture that alpha. And I just want to see if you, I know Gav has experience with this ETF, but Austin, if you had it, this might be a better way.
Dude, I just added some of this on literally maybe yesterday or 2 or 3 days ago. I added some and I'm already up. Jesus Christ, I'm already up 17% on it. In like 3 days. So shout out. Yeah, BTCL is just double leverage spot Bitcoin, and I think it's the only double leverage spot Bitcoin on the market. I think you can do BITO or something, which is to like BITX is to like futures or stuff like that, but it's not to spot. So if you want spot, this is the way to go.
Oh, I guess they're running the wheel on some of these mining names. Jack said it basically paid for the Florida trip. That's what I'm talking about. So quick question. How closely do these reflect? So if Bitcoin just doubled, this should in theory quadruple.
There's obviously there's slight slippage long term just because any 2x leverage there's going to be slippage on it. Yeah. But these Bitcoin moves or crypto moves, they're aggressive and they're quick.
Look at Bitcoin right now. Oh, yes. We are.
So to answer your question, it's more like 2x to 3.9 probably. Austin, like it would go for a 3.9x.
Yeah. But on the low end, double.
That's that big old Bitcoin.
Yeah.
Did somebody just buy? Because we got the hourly and I saw a little green blip.
Yeah, bro.
Someone bought 3 shares. I'm assuming here. That's awesome.
Yeah. If we can get a
So you just set a new high. Congratulations, guys. Whoever just put in that order of 3 shares, you just created a new high. You're
Dude,
moving it all on
I
your
see
own.
this guy saying BITX, but again, BITX is not to spot as far as I know. It's 2x futures. So you're not
Spot is the key.
What
Like,
the
you
hell
have to
does
make
that
sure.
mean then?
okay. So there's a difference between futures and spot. Spot is the current
Yeah, price at time.
price
So
of the day
what,
moment.
when
and
is the
futures-
future that we're speaking of?
It's a front month CME Bitcoin future. It's a great question. I probably plug it into ChatGPT if you want a perfect explanation between the two, but I do know that there is a difference.
There it is. Right
Nice.
there.
Hey,
Quote myself.
just buy Bitcoin.
Just
There
buy
you go.
Bitcoin.
That works
I
too.
said it, so I'm just going to bring that back into my life because I'm getting too complicated here.
Well, okay. Well, I guess the difference is there's institutions that cannot legally buy Bitcoin for their clients, and that's where these actually come into play.
Mm.
The average person, yes, of course, you can just go buy Bitcoin if you want. These are also leverage plays. So for people that are looking to have leverage, it might be more interesting to them, right?
Yeah. I would like to get it. So, and don't skewer me, chat here, but futures akin to options, correct?
Yes, but not on individual stocks. It's leveraged plays on typically on indices and commodities, and you are not dealing with time decay or with IP. So futures, you can trade something like SPX or ES, or MES if you want to go with a little bit less leverage.
Yeah.
And you can trade it and get kind of like a similar to trading like a SPY call, but you don't have to care about theta decay. You don't have to care about IV spikes. You don't have to care about any of that.
So any of the complicated stuff?
All the complicated stuff goes out the
Why
wall.
have I not been trading futures this whole time? Why have both of you said nothing up until this point?
I like trading futures. Yeah, I trade a little bit of futures here and there.
Yeah.
I think
Time
it's less,
decay is the worst aspect of it.
It's less juice though. It's safer, but I think what I'm told is like less juice to be had.
Well, no, not if you're trading ES directly. ES is
That's true. That's completely different. Yeah, you're right.
Yeah, if you're trading MES, it's definitely a little bit less, but that's just probably safer. Also, yeah, nice, David, call him out. Also, if you have NQ, I don't know if you've ever seen how NQ moves, but it's insanity. I've traded NQ before, and if you're in 2 or 3 NQ contracts, it's crazy. You're moving like thousands of dollars a minute.
Well, yeah, because you're talking about an asset price at like $20,000 a clip, dude.
Yeah, it's pretty nuts.
That's crazy, dude. I actually want to go short on this real bad. What's the premium? What's this going to cost? What's this going to cost for me to take a flyer out on this right now?
Take a flyer out.
We just ended Austin's life now.
Yeah.
He's just going to be future trading.
Austin,
Don't see me ever
Austin,
again. You see my family on the street.
Austin, you would be a good fit for a prop firm, in my opinion. I don't know if you're familiar, but a lot of these prop firms, they offer a evaluation. So you pay anywhere from usually $75 to $400 to get a simulator account that has certain rules on it. You then trade on that. If you can make a certain amount within a certain period of time, then they give you a fully funded account, and then you trade with their money, and you get to keep like 85, 90% of the profits.
Oh, that much?
So yes. So there you go. I mean, it depends on the one. I think you're familiar with one of them. Who was the one that you mentioned to me a while back?
I know a guy that does that. That's his whole business.
I know a company.
I think it's T3 that does
T3? Yeah, T3 does that. Elite Trader Funding does that. I did a space with them a week ago.
Yeah.
But what's nice about that is then you can jump in and you can learn on like a simulator, and you can trade NQ. You can watch it move around, but it not be, real money off the bat. But you still have a little bit of skin in the game because you paid for it. Yeah, Apex does it as well. So there's a lot of different ones.
Yeah, I see a lot of there's a lot of shilling going on with that.
The shilling,
a lot of money in it, I'm assuming.
Are you the shilling villain?
I'm saying there's a lot of affiliate commission in that game from what I've heard. I need to get myself an affiliate payout on myself.
Yeah, exactly.
So yeah, I think there's an easy trade here. Oh, it's flipped. Never mind. Yeah, I would happily trade this right now.
You would trade that short?
Like prime time. Yes, come on.
Bro's going to short NQ as his first futures trade ever.
the kahunas.
Take out 5 cons while you're at it. Yeah, why not?
I can't even imagine what type of position size you're trading with. Then it's like
Yeah, you're
It's like
trading.
a
Yeah,
couple $100,000 then, eh?
I mean, if you're really listen, I've had my heart rate go real high. That's why I don't trade much NQ anymore. I'll trade the minis.
Yeah,
Or
this is like make or break it. That's why I like it. It's like this will either be the best thing ever, or it'll destroy me.
Yeah, pretty much.
Feels a little degen-y.
Yeah, no, futures totally can be very degen, or you can be super, super rule oriented, entries, exits, scalping, all that stuff, and you can be like real
Well,
quick with it.
I just like
Gav,
this setup right now. This is premium.
well, Gav and I do spaces all the time with people who only trade futures in the morning.
Yeah.
Like
Throw me into one of those. I'm gonna have to invest.
Shark, I actually,
yeah.
I'll just share this here. I actually have a call this weekend to potentially set up Wolf Futures, which will
Whoa.
potentially be a account dedicated only to hosting future spaces, futures trading, and do it for like an hour in the morning in pre-market with some futures traders. So just a idea that I've been mulling on.
Is that going to replace live market trading with Wolf
No,
Financial?
No, this would run from like 7 to 8 or 7 to 9 a.m. Eastern before I do Wolf Financial live trading.
You hate sleep. I get it. You
No,
absolutely hate sleep.
just to clarify, I would not be hosting this. I would be asleep and somebody else would be hosting it underneath my brand. Just to clarify.
Awesome.
I actually love
right.
and I do not like waking up early at all.
No, you do not. All right. I gotta cut
Porter's
out.
right. Me taking 20,000 out in margin that was degen behavior during that market tantrum 2 weeks ago. That could have ended very poorly. 100% agree with that.
But live and you learn. So, all right. I love
Austin,
y'all.
Austin, is it time to order some bombers?
You stay up. You stay up, King.
All right.
Get on close to that camera, like. But yeah,
Time to order some bombers.
there you go. Yes, it is. All right. I love you. We're going to dinner with that guy in like 4 hours. This guy's trying to
4
order a
hours.
bunch of barbecue.
I'm hungry.
Insane.
Well, he's got some gains.
Fourth
God's
day
got
in a
some
row.
gains you got to support now.
4th day in a row ordering barbecue. Yeah, I have been
Pop
gaining.
over. We'll talk about it.
Not sure it's in the right places on this trip.
Pop on it. All right. Love y'all. Stay blessed now. Bye-bye.
But